Welcome back to Next Gen Investing. It's now time to talk all things CrowdStrike. As CrowdStrike has its earnings out today after the close, there's actually sneaky a lot of companies reporting today outside of NVIDIA, which I have definitely been honed in on. But CrowdStrike has really seen, still a pop on the year. I know we've pulled back about 18% from highs, but Marley Kayden joining us here in studio, of course, host for the Schwab Network. Walk us through all of the expectations from the sell side and overall Wall Street right now.
Absolutely. Like you said, they are on the year up close to 25% right now. So they're performing well. As far as expectations, EPS expected to come in about 83 cents. That would be down about 20% year over year. Revenue expected to come in at 1.15 billion. That would be up 19% year over year. Now this follows their fiscal first quarter, which was not particularly strong in a revenue perspective. They had a year over year increase of about 20%, which was lower than the 29% year over year growth that they saw for the full fiscal year of 25. So if they do come in line today with that 1.15 billion that's expected, that would signify an even slightly lower growth at 19% year over year. So it would show some decreasing growth, still growth, but decreasing. But their revenue guidance was a little bit worrisome that they gave. Cash generation definitely will be all eyes on. It decreased in the fiscal first quarter, dropping about 13%. That most of which was expenses incurred due to their Falcon platform outage that they saw last summer. So some of that may have been a one-off, but absolutely will be looking at those cash generation numbers for sure as the street waits for these. But despite those few worries, CrowdStrike's recent quarter did present what a lot of analysts are calling a compelling narrative, and they're doing strategic execution. They're executing well. Their new annual recurring revenue was about 194 million in the first quarter. That exceeded expectations. Full ARR was 4.44 billion. That's a 22% year-over-year increase. It's expected to be even higher this quarter at 4.64 billion. So they do have some growth. It is in line with their projections. The company projecting to be ARR of 10 billion by 2031, which would be a more than 120% increase from the levels that they're at right now. But that Falcon platform, the one that had the outage that caused that issue with their cash flow generation, remains their central growth engine, for better or worse, depending on which analyst note you're reading. That's their primary function of growth. They have their Falcon Flex model that adds 774 million in terms of total account value. That's a 31% sequential growth and more than six-fold increase year over year. So, they are showing really impressive growth with this Falcon category. Subscription gross margin remained exceptionally strong at 80% last quarter. It's expected to be strong again this quarter. And free cash flow is about 25% of revenue right now. So, they are well positioned, but they're also, their valuation is a little stretched, like a lot of the companies that we talk about here. So, depending on what note you're reading, they have been facing some downward pressure of late. If you look over the last several trading sessions, like over the last 30 or so trading sessions, they're down in about 70% of them.
Yeah, so a couple things. First off, somehow, I know this is a CrowdStrike, so I got to tie in the NVIDIA, though, just a little bit, though. NVIDIA, though, like Apple, casts such a big shadow. It's frustrating waiting those 20, 30 minutes to get the results, but it allows CrowdStrike to serve as an opening act, get its own center stage, and that's going to be important, I think, because this is a really critical company. It's in a really critical, subsector of IT and where the market's going. All that to be said, we talked about how nice the stocks performed despite the huge outage and 3 consecutive negative reactions in earnings. Not very many stocks can just, power through that and still have really nice performance. All that to be said, though, my question for you, Marley, is this just going to come down to margins? We know it's got a really critical role, but is it going to have to offer some sweetheart deals here because of that outage?
It seems to be that's what it looks like. Yes. You mentioned they've had 3 consecutive down reactions, all of those roughly about 5%, but they've had 9 consecutive quarters where they beat on EPS. So, it's fascinating to look that it's not actually the top and bottom line performance that's what's really driving here. It is the margins and it is the guidance. I think the last quarter, the guidance was the issue here. There are strong bull cases. If you walk through what the bull and bear cases are, depending on whose notes you're reading, what analysts you're looking at. They have consistent ARR growth driven by Falcon. They have high subscription growth margins. They've got good pricing power. They're showing efficiency. They just did a share repurchasing, which is signaling that, that management thinks they're undervalued and they're confident. But they have a really high valuation, and we've seen what that does this earnings season particularly. They have increased competition. There are a lot of emerging startups that could be a potential issue. They do have some pricing pressure. The dependence on the Falcon platform also seems to be another concern here. So, yes, I do think it's going to be a margin story here. I mean, that's what margin and guidance, maybe 50-50 on both. But, the guidance was disappointing last time, and so all eyes are sort of on it, although I think because it was disappointing, maybe expectations are a bit lower.
That is very true. And also, I know it's been because of the unraveling of some of their, I'd say just bad press following, of course, the mass outage. They have admitted they've had to spend, like you said, the margin story, really more to retain a lot of these customers. But this space also has shown no signs of weakness across any type of tech stock with cybersecurity exposure, that I can't imagine that we'd hear something entirely different from CrowdStrike. I guess that's always possible, though. That's always a very, very real narrative if, of course, they paint a very different picture as far as the rest of this year and their guidance.